Hey, good evening, everybody. This is John from UrbanDigs on your rainy Friday, and I've got your weekly market update here. Uh, I like to keep things short and simple, so I'm just going to dive right into it. Let's start with active supply. I'm going to pop that up on the screen any second now, but you can see here we're at 6,800. That's the current active listings on the market. And don't forget, so we like to scrub out everything that's not what we consider to be truly active. So if something's been listing on the market for a long, long time and hasn't been updated, we're going to take that out. So we're only going to give you the best of the best. That's how we roll. 6,800, that is about 6% higher than where we were last week, which was around 6,400. So we got some hefty supply on the market. That's a good thing. Again, that's the first step in the activity recovery is the actives coming on. Next, let's look at pending sales. Pending sales, again, is a pipeline number, and we're at 1,469. Last week we were about 1,500, 1,540 or so. So we're still coming down. Again, these are sales that are closing as time goes on, and they're not really being replaced yet because we had that shutdown. So pending sales still going down. Don't get too freaked out about that. It's the kind of thing that's going to get jump started with activity, and hopefully we'll see that creep back up. But for now, your pending sales number is going to be a little bit lower. Let's switch over now to how many actives came on the market last week. And for that, I'm going to go to the dashboard, and I want to look at active here, and I'm just going to say 1 week ago, and let's give that a search. 592. There it is on the screen, and you can see that's about 40% higher than last week. That's a big jump. We're at 423 last week, so 592. So even though it was sort of a holiday week last week, we just kind of kept it low, we came right back up this week, 592. Again, that's the first sign of market activity rebound. We're going to see those actives come on. First they go active, buyers come see them, get that feedback to the seller, get the negotiation, get the due diligence, get the deal signed, and then you get into pending sales. So that's the first step, is get those weekly new actives in. Let's talk about contract signs now. So let's go here. Let's change this here to contract signed. Let's see what we got for last week. 70. So that's a good increase. Again, last week was a holiday week, so we went 54 last week, as you can see on the screen now, up to about 70. Again, it's going to take a while for the buyers to get out there, see the places, negotiate, get all that work done. It's going to take a couple of weeks. So here we are, when the market's been open a couple of weeks now. Let's keep an eye on the weekly contract signs as we get toward the end of July. So that's going to be when we should really start seeing some interesting figures there. And with that, I want to everyone's asking us about where the real-time information is, and with that, I want to show you this little chart here. I'm going to pop it up now. And what we did here is we looked at the listing discount by when the deal was actually signed. What does that mean? Well, it means if something's signed in February, I want all the deals that signed in February, I want to see the listing discount for those deals no matter when they closed. So I'm not talking about the listing discounts for the ones that closed in February. I'm talking about deals signed per month. So, but let's just go back to February. Let's start there. February, listing discount was 7.5%, and you can see it kind of increasing there. March, 7.25. April, that's the highest. That was the peak of COVID. 10.1%, kind of came back down in May, 9.5%. And then in June, you're looking at 7.7%. But what's interesting is notice that red line. That's the count. That's the number of deals done. Now look at February. There's 400 deals that were signed in February that have actually finally closed, and we have the closing information for the listing discount. 400 deals. March, 235. April, 41. By the time you get down to May and June, we're looking at 12 and 2 deals. So this is kind of one of the interesting things that's happening with the market, is that as the volume decreases, you're going to get these spikes in listing discount. The market's going to look like it's all over the place simply because it's a low volume thing. So that's a bit crazy. Just keep an eye on it. Keep your clients informed that in a low volume market, you're going to have these spikes that kind of do that to you. Lastly, I want to take a quick look at the rental market, and I think this is kind of the real story here. Let's look at the new rental listings on a year-over-year basis and just kind of see where we are compared to the same time last year. And you can see that huge spike there, and this is the real story. You can see the slope of that increase that kind of started as the market reopened. It's pretty steep compared to where we were last year. Now bear in mind, summer is, of course, the busiest time for the rental market, but this represents a lot of inventory hitting the market at a time when the renters are just barely getting back at it. And I'm going to switch now, and I'm going to show you the lease sign. Now, let me just tell you, this is all RLS. A lot of rentals don't come into RLS, but still, it's a representative sort of sample size. And let's look at the number of renters, or the number of leases signed. And you can see it's increasing, but it's still nowhere near absorbing that inventory. So as we enter July, enter August, kind of finish up the summer, we could see some really interesting things happen with rentals. I think landlords are going to be in a tricky place. So if you've got renters out there, be aware that this is a great market for negotiations, for all kinds of caveats from the landlord, for OPs, all that kind of stuff. So be aware on that side. All right. Well, I hope you enjoy your weekend, and we will see you next week on the update. Thank you. Bye.